Hey, good afternoon. All right, so today is just maximize that. All right, so today is Saturday, April 20th, and I'm only just gonna do a really quick talk recap on yesterday's price action. Just fix these candles. And yeah, anyway, yesterday we had a bear trend from the open, and again, what I'm gonna do is I'm gonna just adjust this. Okay, yeah, we had a bear trend from the open, and it looks like it's just carrying on from the bear trend that started with this breakout, and we're still in this channel. And it actually looks like we broke, maybe, I don't know. I was going to say it looks like we've broken out the bear channel, because if you sort of join these lows, actually, no, we haven't broken out. No, we haven't broken out. I use the moving average here as almost the resistance area for the top of the channel. And of course, you can just extend the lines to the bottom. But what was interesting was this was a day after we had the report of the Israeli strike on Iran, and it was reminiscent of. I mean, we had a very big drop in the overnight session. So this is the prior day's price action on the 15-minute time frame. We now had this big, massive drop. And it was reminiscent of when Russia invaded Ukraine on February 24th. I remember we were in a similar bear trend, and then we had this big, massive drop in the overnight. But the difference is we had a massive rally, if not one of the biggest rallies I've seen on the ES. We went from 4110 that day and went all the way to almost 4300, so almost 200 points. Yeah, at the time I struggled to trade this day because of how big the bars were. I wasn't managing my risk properly. As you can see, these were my recaps 2 years ago. Not recaps, well, at least my scribbles on the day. But anyway, like I said, this information made me have a bit of a bias on the day, and I think that may have affected my trading on the day. I actually think that's going to be the lesson for today. So what I'm going to do actually, before even going through the bar by bar recap, I don't know, my Ninja Trader always does this. Anyway, before I start going through all this, I'll tell you. I'll tell you what I did and how and what maybe I should have noticed. But I mean, of course, trading is all probabilities. It's all, let's get rid of this because it's all hindsight bias. Trading is all probabilities. So you may have a sort of leaning in one direction, but of course the market can present something completely different, and you have to always expect anything, because at the end of the day it's two people who are seeing that news as bullish and bearish in both directions. All right, so we had a big massive sell climax, and I saw this as a wedge bottom. So imagine this is the breakout, and this is the second leg of the breakout, and it's a wedge. So you have the first push, second push, and a third push. So if I was going to draw my lines, I would draw it like this. So it was technically an overshoot of the wedge, right? So therefore, I'm expecting at least some sort of rally, at least a reversal to the other side of this channel. I did have this drawn here on this tick chart. I had it on the 20k, but for some reason Ninja Trader is not loading up, and this has been happening for some time where it just doesn't load up all the information. I had a nice bear channel here, and yeah, all my menus are gone, my indicators are gone. All right, so you can use this channel. As you can see, we have an overshoot. So my thesis is we're coming to the other side of the channel, as we normally do. I assumed that we would go straight up there. I did not think, when I was trading it, that we could have a pullback to try and close the gap. Of course, that happens a lot when we're in trading ranges. In fact, one of the hallmarks of a trading range is gap fills. So we went up and we went down, and you can say it's a big up, big down. So we're currently in the training range over here. That's what happened. But there were some clues from the overnight session, and I'm going to use I mean, we could use this chart, but I'm going to use the 15-minute time frame just to make the point, because most people have that. All right, so there are some clues that gave the impression that we were probably not going to rally, and there was a high chance we were going to, sell off. One, we have a double top of a sell climax. Sometimes it goes sideways and then we break out. But you can almost see, okay, first of all, we have a nice breakout over here. Let me use the cursor. So we have a nice breakout over here. No bar is below the prior bar. I believe this is the first pullback of this trading range breakout. Then we have another breakout here. So it's another buy climax, right? And you can see we now have a third one over here. So technically that's a wedge. Right, 1, 2, 3. So you have a bull channel. Okay. It's such a tight channel. There's a higher chance we're going up than going down. Right. Now we have buy climax, buy climax, buy climax, and then a breakout. Sideways. We went sideways here for quite a while. And so we had another buy climax. And look at the follow through. Such a deep pullback. We almost touched this level. I think we may have even touched it. Yeah, we did. We closed that gap, at least with the tails. It's still really strong, but you see this pullback, and then at the open we get a test of this high, and then a really deep pullback. So deep that it's already broken the trend line. I mean, if you extend this trend line, let's use this extension. Oh, actually, it didn't break it there. But the point I'm trying to make here is that you can see that we have an overshoot, at least on this time frame. We have an overshoot, and we're getting really deep pullbacks, right? And this is another buy climax. So you're getting so many buy climaxes that there's a big chance we're going to get a deep reversal. Whenever we get climaxes, we get deep reversals. So here we have a climax, deep reversal. Climax, we're probably going to get a deep reversal. It's in itself climax, deep reversal, or deep pullback, whatever you want to call it. So the fact that we're doing that could lead to that. Let's compare it to what happened. This is the 60 minutes, so it's a bit harder to see. But if I zoom in, it's harder to see it here, but you have one big bar, and then possibly a pullback here, second bar, and then a bit of a deep pullback, close this gap, and then and then in the day session, you just had this big, massive rally. So if you look at the actual session itself, you're getting a lot of pullbacks, right, all the way up. But I think what's key here is the fact that when we got here, we went sideways. We didn't go down, although we're getting deep pullbacks. So everything is, there's a lot of overlap. Technically, this is a bit tight. It is a tight channel, but it's not a strong bull trend. So therefore, we will get something like this. But what happens afterwards is what's strong. We now start to get gaps. And so therefore, and I think the next day we had follow through. Yeah, we did. Right. So that was just kind of the beginning of a massive rally. But here, things are slightly different. And I think the higher time frame has a lot to help in that regard. So if we start with a weekly chart, remember we're already extended, and it almost looks as if, and then obviously this moving average could be offering some support, maybe a double bottom over here. Buy climax, probably a second leg trap, first leg pullback, second leg. And I think the market is trying to get back down here, or at least to test this breakout point. Well, we've tested it already, but maybe to test this breakout point. At least that's what I think. But it's hard to say, at least from this time frame. And that isn't enough to tell you or give you any information about the second. But I think this gives you a bit more information. All right. And particularly this area, right? Think about it this way. You have a breakout, right? And then you're getting a micro channel with no bar going above the prior bar, so no day going above the prior day. So this is very strongly bearish. And then we get an overextension of almost like another breakout here of this, right? And of course, it's a sell climax, so chances are there's going to be a lot of profit taking. And of course, we're testing this area this day where you have this trading range, so chances are we're probably going to find some buyers. Maybe we might get a bull bar, might get the next day coming all the way up here before it comes down. But this is very, very strong, especially because we have a gap between this low and this high. And also the overlaps are very small. They're not as big, and no bar is going above the high of the prior bar. All right, so that's that. Look at the 1 hour. This was yesterday. Really tight channel. Well, relatively tight. Gap here. And then we now have bulls aren't really making money. The stop order bulls are not making money. There's an attempt here, very little. And then if you look onto this day, very little here. So it's very difficult to see any evidence that says that we're going to go higher. Even here when we obviously did this, the stop order bulls aren't really making money. So the trend is still very relatively strong, but extended from the moving average. All right, now let's go to the 5 minute. Now I had a bias. I was so eager to buy because in my books I was like, okay, we haven't really touched this moving average. Maybe we'll touch it. Maybe that's another reason not to buy. Maybe we'll touch it and break above it, test this high. And that was my target. I went long above bar 3, and I'll explain why that was a bad buy signal. I actually I didn't write in my notes why it was a bad buy, but I also mentioned not to, definitely not buy. And it's because this is a trading range, but we'll go into that now. So we had a trading range prior day, the prior day in this around this price, and then we tested the bottom of the range twice, double bottom, and then went up, and then started to test the top. But of course, we have this moving average in the way. It did not make sense for me to be buying at this part of the range. This is the top of the range, and I think this is 2 legs down, 1 pullback, 2. Okay, maybe I saw it as a wedge, 1, 2, 3, and therefore we're probably going to do 2 legs up. We actually did do 2 legs up, but it came in the form of a triangle. Whenever you find that happening, it's usually a sign that the bears are doing everything in their power to protect their stops and stop the bulls from reaching their targets, or whatever you want to call it. That's just my thesis. The bulls are hoping we get to this top, and then maybe we'll get 2 legs down. But instead, this will happen. 1, pullback, 2. We never got there. We formed this triangle. Anyway, this wasn't the greatest buy signal, and look at where it's coming from, 2 bear bars. You need a second bull bar closing here, or at least closing really high or above here. That would kind of give you a bit more conviction that we're probably going higher. But actually, we got a bear bar closing on its low, so it's a pullback and an L2. So this is L1, L2. So it wasn't a really good buy signal seeing this. And I think I did exit. Then I saw this bar, and I think I was already in a state where I was like, I've got to make my money back, or really bad state. And I went long again. Oh no! I don't think I went long. I did have a bit of confusion in this area, and whenever you're confused, it's because you're in this thing, trading range. Anyway, so I decided not to trade that for a while. Then I saw this selling off, and then I went long here, assuming this was a wedge. 1, hang on, let's just mark it. 1, 2, and 3. So I bought above this bar, put my stop below it. I didn't actually get stopped out because my stop was pretty wide by a few points. And then we had this, which is a bull trap. Whenever I see a big bar like this, racing into the moving average and then doing this, it's not usually a good sign. The same thing that is happening here is happening here as well. So the first leg up, pullback, second leg, another triangle. Now, at this point, I'm supposed to exit, and I did see this. It was a double top, lower high at the moving average. And I remember at the time saying, this is a double top, lower high, I should exit. but I was very proud. I did not want to exit. So I let it hit my stop. And at this point I thought, that was so dumb. But again, this was another wedge. Again, with my bias. 1, 2, 3. I had a bias. I bought this and then saw we had a doji, and I saw this. And at this point, I was quick to exit. Or you could even argue the wedge is this. I was quick to exit and I went short. Because I think at this point I looked at the mirror chart, right? And this is how it looked at the time. And I asked myself a question. How many bars are below the moving average here? None. Most of the bars. At this point, I think they're over 20 bars above the moving average. This is a strong buy. Or at least not a strong buy. This looks more bullish than bearish. And if we're still getting strong bull bars above the moving average, chances are we're going higher. And I probably would have bought above this bar or even above this bar. Had I traded this, I would not have sold here, right? Just based on the fact that if I did see this as a bull, I definitely would not have sold here. 2 bull bars and then trading range. It just didn't look like something I would sell. I would see this, would consider buying, definitely would have bought this bar. And I would have bought it or at least sold here because it was, you had a strong bear bar, 2 strong bear bars at the bottom of the trading range offering a sell to close opportunity. So you could have gone short here with a stop above this bar or even above here and gone for 2 legs, 1, 2. Somebody asked me about talking about exits. If I had gone short here, I would have gone for 2 legs, maybe tested this low, maybe taking profits here, seen what would have happened once we had pulled back. I don't think it's a good idea to flip positions until you can see evidence of the other side making money. It's also the reason why on this day, I didn't want to take this short. I actually took it around this region over here. All right. Anyway, so we've got this triangle. Now you can see the bears are definitely in control. We have another wedge here. And then you see the bulls are just getting trapped. They got trapped here, and they're going trapped again. This is now when it looks like the bulls have finally decided this is not working out. We're giving up. And so we now get a massive sell climax. I caught most of this all the way down to the bottom. And this is the point where I decided I wanted to flip. Now, another thing I did look at was the trend line. I noticed that the trend line wasn't broken. And there's this rule that says, Al Brooks has this rule, that it's never a good idea. Let's actually just get rid of these lines. It's never a good idea to flip positions when the trend line, no, that's not the one. When the trend line hasn't been broken. You need to see that the evidence that the bulls are strong enough to break the trend line such that the next time they attempt to buy, they will get above the trend line. So like this, right? Break a trend line, they would even go higher. All right, so we now had this, and then of course, because, as I said, this is the bear channel, we tested it and we overshot. And when we overshot, I think I was really eager to buy. I bought this bar, then I saw this bar, it stopped me out, and then this bar came in. Now, this is probably not a good buy, 37, because it's following so many bear bars. So again, back to the idea of evidence. There's no evidence that the bulls are making money yet, but they're scaling in. So they'll buy that and they'll buy lower. And they bought below this bar. As you can see, we get a really nice bull bar over here. And I did buy this bar. Because again, I'd been burnt here and burnt here. And obviously, fool me once, fool me twice. I didn't want to get burned here. I basically decided, let me just be really careful. I'm not going to buy too much. So I decided that I would halve my position here, and I bought more when this bar 42 closed on its high. So I had twice my position. So my average was about here. Now, I was going to mention something just before I go on. I think I mentioned it before. Sometimes whenever you're confused or whenever one is confused, I have noticed that there are areas and things that the market does that give you some really good trades. So whenever the market's far away from the moving average, nobody likes to sell too far from value, and I'm using the moving average as value. So therefore, it's always a good opportunity to scalp. If you see a bull bar, just buy it. Yeah, it might go below, but you know we're going to get back to the moving average at some point, so you could make money that way. And whenever I'm confused and I'm looking for a trade, that's always something to do. Oh, another thing. Opening around the moving average from the prior day is always a bad idea to just take a trade at the open. It's usually a good idea to just wait, because if you are opening at the moving average, you are most likely in a trading range and you are not going to get any good trades. It's a limit order market. A limit order market basically is where they're putting limit orders at the bottom and at the top of bars, and they're taking profits quick, and hence you have these tails. The market becomes a stop order market here, when traders are selling with stops below bars here, and they're selling closes. Those are the markets that I tend to do better in. Limit order markets are harder to trade if you're not a scalper. All right, so we took this long, but you're seeing tails appearing above these bars. This is already giving you evidence that we are not going very far. You get this first push, a pullback, second push, pullback, third push. So when I traded this, as I said, I bought here, held through this, saw this bear bar, and this was the first sign that I needed to exit. This became a massive bear bar at first, and became a bull bar, and I took my profits at the top. And it looks as if everyone did the same thing. Also, it's the top of testing the sell climax here, and it's also testing this bull candle. Oh, we hadn't even gotten to the bull candle. Well, it's close. Testing this region as a breakout point. But anyway, the fact that we already got a bear bar here and a minor reversal just meant that I needed to get out at the next high. And usually I do that. Whenever I see evidence that the bears, limit order bears, are beginning to make money. Like here we have a stop order bear, took sell, they make money. Another would have sold here, they sold here, now they're making money. Then they got trapped here because we now have a triangle, right? We have 4 bars inside each other. I, or you can say I, right? But whatever this is, a tight trading range. And we now got a massive breakout. And we got a second leg. Now, when we got this breakout, I was aware of the fact that this could be a trap, but I was hoping at the same time, again, back to my old thesis, that we're going higher. I ignored the fact that we had such a lot of selling. Maybe what would have been good is if we closed and we just kept on going up. But as you can see, look at what happened here. We got a lot of profit taking at this point, and it closed at the moving average. I assumed this was a trap and we would keep buying, but instead we went below. And the moment we went below this climax, this buy climax, I already assumed this is a wedge and a pullback. You can say it's this. It's a wedge and a pullback. And the trend is continuing. So it's 1 pullback, 2, and the trend is continuing. I assumed we were going to test this low and then reverse because it looked like a trading range. But the thing I didn't notice is the fact that we did not close this gap. We came down, pull back, and this is another one of my favorite setups. A breakout over the MA, pull back to the MA, and then a test of the lows. So something I always do now is whenever I see a breakout like this and I'm late, I just sell the test of the moving average. I know we're going to get a second leg down. It's one of my favorites. This is such a tight channel down. It's a breakout, pull back to the MA, a failed breakout, 2 legs up, 1, pull back 2. So it's an L2 again. You get another leg down, testing the lows. This is a hard sell because you're testing a really strong rally and it could be a trading range here. So you have the top of the range, the bottom of the range. But actually, you now got this bull bar, and it closed with a tail above it. So instantly, you're thinking this is not a good buy. You get a breakout below, and that breakout now failed. Testing whatever level I have here, some level from the past, God knows. Oh yeah, it's the gap fill. So we have a gap here. So basically, we went up, and it's almost like they left a bunch of bears over here, so they're trying to get out break even. Anyway, we now get a nice bull bar, but it's following a really tight channel, so this will offer me a second leg down, which is what you expect. You get a wedge top, 1, 2, 3, right? I now get second leg down. Now this is also a wedge. 1, 2, 3. So this is a lower low double bottom, and you also have a wedge here. 1, 2, and 3. So for those who are wondering what I mean, imagine this. So this is what a wedge is, but I don't draw the other side. Yeah, so anyway, so we now have that. You could buy above here. I wouldn't buy it because it's past the red dot, which is usually a sign that there's not enough time to structure a good trade. And secondly, it has a tail above. Again, at this time of the day, not a good time to take a trade. In fact, I usually just ignore these bars. You don't normally get anything in these bars. These are the last 4 or 5 bars. The market tends to just hover around the price where it's at, and just kind of stays there. No one is usually taking any more trades. I think except from when you have earnings, but most of the times nothing usually happens. So you don't want to take any trades. At least above past bar 75, not much really happens. So overall, we had a similar price action to the prior day, 2 days ago. So we had a sell off, 2 legs up, and then continuation. Same thing, sell down, sell off, 2 legs up, and continuation. And it looks like it's a sell off on the 15-minute time frame, because you can see we're testing the 15-minute moving average. All right, so yeah, so that was yesterday. It was a tough day for me because I was a bull, but you know, we made money, but it wasn't easy, because when you go in with a bias, it becomes hard to take trades because you're fighting the market. But if you are trading in the direction of the market, things tend to work out. All right, this is a bit of a long one, but hopefully you learned something from it.